In this video, I break down our strategy that we teach inside the mentorship group to one of the students that's booked in a one-to-one session with myself. Ethan's been in the mentorship group for about a week now, so it hasn't been very long at all, but obviously he understands some of the concepts that we've gone over together already, whether it be on the live trading calls or the group coachings or whatever, so I didn't have to go into crazy detail on certain bits. It was more the refinement of the chain of state delivery, manipulation, and other little bits like that. But Ethan said it was very, very informative. He enjoyed the call. I did ask him if I was okay to upload this to YouTube, because obviously our one-to-one sessions with our students are for our students only, but he was kind enough to let me upload this to YouTube for you guys, and hopefully this can help you with your trading. Maybe you'll spot something that I've gone over that you don't really notice before, and you can see, yeah, that actually happens to me a lot. Fingers crossed it will help you in any way possible regardless. But if you are struggling to find a proven profitable system and you need that extra bit of guidance, there's a link in the description of this video. You can book a call with my team, go over the packages that we offer for the mentorship group, and see which one works best for you. But now let's get into the video.
So obviously the first part of the strategy is obviously finding your daily bias. Are we overall bullish? Are we overall bearish? Because obviously sometimes if we're in a bullish trend and we are looking to take a sell from back to equilibrium, or back to inefficiencies, then that's where we would be targeting. We wouldn't be looking for sells back down, down to here, for example, because we're in that bullish bias. So in this example, we've got, if you go to the daily time frame, you can see we're making bullish order flow, highs, lows, highs, and then we are inside this daily bullish FVG, which we seem to be respecting over the previous days where we've tapped it.
Okay.
And we've got liquidity above to target. That we've got a liquidity zone to target above on the daily time frame, which is all-time highs in this case. Buy side liquidity. So we found our daily bias. We can see we're making bullish order flow. We're probably going to be wanting to look for buys up towards this daily this buy side liquidity, and we've also disrespected bearish order flow on the daily time frame because we've inversed this bearish daily FVG. Yeah.
Okay.
Sweet.
That just means it's just like gone through it.
Gone through it, yeah. We've broken through it, yeah. And it can be used then as an area then of support. So whereas it was previous resistance and we were rejecting from it, we've broken through it, and it can be used to support alongside this bullish FEG we got here on the daily time frame. So we're looking for buys. So then the first thing we do is go to the hour time frame. This is what I do anyway, and then I will look for liquidity zones to be taken essentially. So for example, we've got previous day lows here, which are pretty close to these lows, and we've got these lows here. How we would know which lows we want to target is based off how the price reacts from that area. So we're in a bullish FEG, we've got a sell side liquidity we want to target and get swept, and we have obviously got buy side liquidity up here, but with the way that I personally trade, I wouldn't. If we were looking to take the buy from this area down here, if we get the sweep of the low, we get a bullish CISD out of this daily time frame to look for the buys. We get manipulation and everything like that. For me personally, to take a trade to this buy side liquidity, I know I'm probably going to have to hold it for a few days, and I like to be in and out of the market within the same day. So I know I can also see that I've got relative equal highs of the previous day highs as well, essentially. So we've got previous day lows and we've got previous day highs to mark out. So that could be an area of interest for me for liquidity that I want to come back and target if we do take the sell side. So as I play this out, you can see we've swept this previous low now on the 1 hour. So what a lot of people are getting confused about is they think that it needs to close below before it wants to go back up and take the buy side. So essentially, if I just go back to this candle, essentially it doesn't need to, because as we know, price is fractal, and on one of these lower time frames there are going to be candles which have closed below this liquidity. For example, on the 1 minute, we've got candles which have closed below, yeah? So this is our sell side liquidity line, we've closed below. So tick box number one, if you want to write this down, obviously you've got the video now. Tick box number one is find your daily bias. We did that by seeing we've disrespected bearish inefficiencies and we've respected bullish inefficiencies, and we're in a bullish trend with price action. So then we're looking for price to got to come lower to go higher. So we're looking for sell side liquidity to be swept before we start looking to target the buy side liquidity. We do not trade Asia session, so this has obviously been playing out during Asia session. We obviously trade London and New York. In Asia, we have swept this low, and then as I play this out and London opens, you can see that what we have essentially on Asia to give us our bullish bias is, let me zoom right in for you. Sweet. We have bearish inefficiencies being disrespected because again we've inversed them. Yeah.
Okay. And that's confirmation, as an extra step of confirmation.
An
that
extra step of order flow is shifting to the bullish side. We've also got a bullish FEG on the 1 minute time frame here. If I mark that out as green because it was a bullish FEG, which we've tapped back into and respected. So we're respecting bullish order flow, and we're disrespecting bearish order flow. We've got a change in state delivery on the 1 minute here after sweeping sell side liquidity here and taking this external low on sell side liquidity. So everything at the moment is pointing towards, okay, we're looking for buys in this scenario because we've swept external, we're in a daily bullish bias, we've swept external sell side liquidity on the 1 hour, we're inside a daily FEG, and now we've got 1 minute inefficiencies being disrespected, 1 minute 1 minute sell side inefficiencies being disrespected, 1 minute bullish inefficiencies being respected, and we've had our change of state which we've displaced through lovely taking swing highs on the lower time frames. So okay, London is now open. What we're going to see in London is potential retracement to the CISD, or which is basically going to be our manipulation leg in London, which we would then look to obviously take our buy off and find another change in state delivery from there to take our entry. So if we just play this out, 3x the speed. So as you can see, we've got on the lower time frames now, because we've swept external liquidity on the higher time frame. We've swept it during Asia, but we wouldn't be trading Asia. London's going to manipulate because it's one of our manipulation sessions, and we can see on the lower time frames we have these equal lows here, which is also London lows. So this is our sell side liquidity, and we would want that to be taken before we look to go higher. We're not going to just buy during London as soon as we wake up and get on the charts, because we know we're in a bullish market. We want to wait for confirmation during our session we trade. So we've got sell side equal lows to potentially come back down and take. Okay, we've taken them. We've come back into this inefficiency which we inversed, yeah, and we want to see, obviously, does price respect that inverse fair value gap now as a bullish fair value gap?
Okay.
Yes, it does. Okay, so we've respected that fair value gap there. Okay, perfect. So we've taken sell side. We've now taken, so we've got a confirmation of our buy in Asia. We wait for London to manipulate, so we've come back down, swept these equal lows to the sell side, back into that inefficiency, which we previously was a sell side. Now it's turned to bullish because we've inversed it. We've respected that inefficiency. We've come back up, and we've also inversed a sell side inefficiency on the 1 minute, meaning we are still in bullish order flow. So that's confirmation for us there. We've got, for what we want to look for now is, okay, we've got an inverse, we've had our manipulation leg which has swept to sell the internal lows. We want to be looking for our change in state delivery, and personally this is the last attempt to push lower. Or you could say, some people would go, okay, that's the last attempt, so I'm going to take my sell off that. Or some people would go, okay, this is the leg, the swept liquidity, so I'm going to take it off there. I personally like to see a change in state delivery, and I like to mark up the candles which have taken the liquidity. So for me, it would be here, okay?
Okay, so candles that swept liquidity is where you'd
look to
roughly.
take that, yeah. So I need to.
So then,
go on.
So then you just wait for it to, do you wait for it to displace above the CISD to enter, or just if it taps?
So displace through and then come back down, and hopefully, depending on the candle situations, because if we've got an inverse fair value gap, for example, if the CISD was inside this fair value gap, I would be looking to take my entry off the top of the CIS, off the inefficiency, the fair value gap. Because it may not come back to give us the retap if our CISD is in here. It may just want to come back, rebalance to this, and then carry on going. So let's play it out and see what sort of candles it gives us on the way up. So we've had a change of state delivery. We've taken, we've respected this inverse multiple times, which confirms we're still in a bit of bullish order flow. We've had our change of state delivery, our CISD here. And what we can see is, with that CISD, we have a bullish FVG here. Okay, so like I just said, if we wanted to wait for that CISD to be retapped into, and you are set on that CISD being retapped into, you could be putting yourself in danger of missing that trade. For me, in this scenario, where I've got a fair value gap which is above, well, where my CISD is within it, I would take my entry off the top of the fair value gap. Stops would be below the inverse for me that has been previously respected, and then I would target, let me pull this out further, I would target internal liquidity, because like I said, we're an intraday trader, I'm not a swing trader. I like to get in and out of the markets on the same day that I enter it. So for me, I know London's just opened, we've manipulated the low, we've come back down, we've confirmed bullish order flow is still intact. We've got a new change of state delivery because we've swept lows on the lower time frame. And for me, I'd just be targeting Asia highs or even previous day highs, which is up here. Okay, so I would want to be targeting previous day highs, because I know we can potentially move that far during a day. So okay, let's see if this entry plays out. Let me just pull it back to here in a minute so it's cleaner. So let's play this. Tapped. Let me switch to the time frames on the 15-minute and zoom out.
Nice. At that point, would you take 80% at that?
I'd be break even at Asia high there. Let me have a look at the 1 minute. For me, if I know if I'm willing to hold this trade to previous day highs, which is nearly a 12 RR, then I'm more than happy to potentially take 80% at this 5 RR range, because that's roughly 4 RR if you're taking 80% of 5. So 4% gain, and then I've got another 20% of my position to run to this 11.8 RR essentially, which we do end up tapping into. So I don't know the maths on the RR essentially is what's the difference between, so it'd be 5 and then there's another 6, call it 7 on top, 7 divided by 5, it'd be an extra 1.2 RR, something like that, bro. So I would have gained 5.2 RR on this entire trade if I took 80% at Asia highs.
Right.
Yeah.
Okay. But when you actually enter on that CISD, are you setting any buy, stop, or limits?
No.
Or you go into market execution?
Market execution every time, simply because of the fact of if we've had if Asia has obviously give us the confirmation we're bullish, but this may want to manipulate these equal lows here again, and then obviously we need to replay out the sort of system here. And to be fair, bro, because I'm always at the charts, and when we always enter on the 1 minute, essentially 1 to the 5 minute, it can be difficult to set your buy limits to know where the market wants to go before you want to pull that trigger. Because for example, if I set a buy limit on the CISD, it probably wouldn't have got triggered because we reacted off this FEG here. So yeah, I'm always market execution, so I can watch and manage my trade myself.
Okay.
Does that make sense to you? Or is there anything in terms of like
No, that's good. You've explained that really helpful, actually. You also mark at the 5 and 15 minute CISDs.
So
Do you?
go on.
How do you use them then in comparison to the 1 minute?
It's essentially the same, bro. It's one of them where, for example, if we know we're in a bullish order flow and we're looking for the market to obviously expand to the upside, if we've got a 1 minute CISD, which, let's say for example, because it's reacted off that FVG in this scenario, and you didn't pull the trigger on the 1 minute, you could go, okay, I'm going to wait for the 5, as long as it's not a million miles away. And you've got, for a change in state delivery to be valid, you've got to have context behind it. You've got to have liquidity above the target, otherwise that CISD is not going to hold. Which in this example we've taken external lows, we've taken internal lows, we've got liquidity all up here at Asia highs, and we've also got it at the previous day highs. So the context is there for the CISD to work. So it depending on what time frame you use, is either A, how aggressive you are as a trader, or B, whether you missed. For me, it's whether I missed the 1 minute CISD and I want to enter off the 5. So the 5 minute for me would be the same equal low, the same sell side liquidity is taken down here. These are my 3 bearish candles which swept that internal low. My CISD on the 5 minute would be here, which we displaced through, and we then come back to retest here with a 5 minute bullish FVG in between, which is more or less the same as this 1 minute. I'd go stops below that FVG candle there, which is also below that 1 minute inverse value gap, and then I'm still looking to target previous day highs as my main target. I probably wouldn't pull any partials. Oh, sorry, wrong trade. I probably wouldn't pull any partials at Asia highs on this trade because it's only a 2.3 RR. I'd probably look to go break even and then leave the rest run to previous day highs during New York, which we do end up tapping into.
Yeah, I got you. Okay, cool.
So there's the 5 minute CISD because they are the previous candles which broke and swept liquidity to the downside internally, and then basically a manipulation leg during London, and then come back up, displays through.
Nice. So I struggle actually plotting the CISDs.
Yeah.
How, like, sometimes I get it right, sometimes I don't. Do you mind just telling me how to do it?
Yeah. So some people would look at CISD and think, oh, it's just a breaker structure, but breaker structure is measured off the wicks, okay? So you'd go top of the wick there, bottom of the wick there, top of the wick here, so it looks like you're making higher highs, and then you've swept. But CISD is not, it's off the body of the candle. So like I just said, in this scenario, you've got internal lows, because you respected bullish order flow, you've made a new high, and you've come down, you've swept those lows, manipulated the lows, and come back up, displaced through. Your CISD, you always mark your CISD off the body of the candle, and it's always off. So in this scenario, on the 5 minute, we've got a series of 3 bearish candles which have then swept the low, and then you'd always mark it off the top of the 3 bearish or 2 bearish, and you have to have 2 or more for the CISD to be valid. If it's one bearish candle, I'm not classing that as a CISD. Some people do. I personally don't like it. I feel like if you've got a displacement 3, the odds are for this strategy, if you've got 3 especially, you probably have an FVG which you'd inverse on the way up as well. So that gives us that extra confirmation that we are looking to go bullish. Does that make sense? Because if you've got 3 bearish candles, you probably can get an inverse before your CISD, which will act as support as well. So yeah, it's 2 or more is what we say. And like I said, you mark it off the body of the. If you're looking for buys, you mark it off the body of the top bearish candle, which is pushed down and swept internal liquidity.
Okay, I got you. That makes sense, actually.
Yeah.
I didn't know that 2 or more, those, whatever it was.
You were just looking for 1, was you?
Yeah.
Yeah, no, it's 2 or more. So we always say series of downwards candles.
Okay, nice. Also, when you in the live trading calls as well, you guys go back and you check the 1 hour, you check the 15 minutes, and you say that you've got 1 hour fair value gaps as well and stuff like that.
Yeah.
That just is extra confirmation for the trade, is it?
Yeah, so what we're looking for essentially is, like in this scenario now, you're inside a big bullish daily FVG. So you can react from any single point to this daily FVG to then push up higher. The reason we wait for external sweeps on a higher time frame to the low or the buy side is to confirm when we're about to move out of there. Because obviously you could be tapping this bullish FVG, and then you could be clicking the buy button thinking you're going to react straight away, and unless your stops are below the FVG, you're going to be tapped out. But even in scenarios like this, where you come back and you tap it, you can still get wicked out. But essentially, yeah, what we do then is look for fair value gaps. So on the 1 hour time frame, we've got a fair value gap here. Do you understand how to spot a fair value gap, or?
Is it 3 or more, and then there's no price comes in between them?
Yeah, so it's basically like we said, power of 3 they call really. So you've got 3 candles where there's no wick in between the top and bottom candle, and obviously then you use that as like your quote unquote support if you're looking for buys, or resistance if you're looking for sells. Which does add extra confirmation to your trades, and you can even potentially look to layer up from that point as well. Then, like if you did want to, but obviously layered trades are always a bit more riskier and probably not as accurate sometimes. So let me have a look at this, for example, if I can try and spot one for you. No, I wouldn't really be able to. You're inside a 1 hour FEG. You've tapped it, you come back down, because you could get faked out by this here. But this isn't your manipulation. This is just bearish order flow, which come back up. Yeah, you've got a CISD there, but there's no internal manipulation where price builds, which is built here. You'd expect this then, if you want to take your entry off here, to sweep these lows. Let me zoom in. Sweep these lows. Oh shit. On the 1 minute. To then push up higher, but it didn't. It took the highs first, hence why it's come back down. And then from here, obviously we'd still be in this position from the start. You've got accumulation. You've swept and manipulated the low, and then you've got your CISD here.
I got you.
And
okay, that is
through. And you wouldn't have been able to re-enter this trade until this point here. Your stop would be below the protected low. Yeah. And obviously you would have got close, depending on your broker or prop firm or whatever. You may have been whipped out. I don't think you would have. No, it's nearly 10 pips, and it's 7 to 8 pips. So you would have still been in that trade as long as you've got stops below the previous protected low, and then you could have rolled that to highs as well. It is nice. It is more risky in the sense of layering a trade, but obviously it is possible if you can spot market and price action well enough.
Yeah, I got you. Okay, that's making a lot more sense now.
Yeah,
I can have a look on the charts.
And you can see why I've marked this. That was my CISD.
Yeah, 2 or more at the top of the body, not the wick.
And it's because this has taken. So you've got buy side liquidity, sell side liquidity, or you could even, oh shit, I can't remember. You could even say like these equal lows, essentially sell side liquidity, and you've just been wicking it all the time, and then you finally get a close below it, and then you come back.
Okay, that's how you do. What about the manipulation? I hear that a lot, but I don't really know what it is.
Yeah, so manipulation is it's basically this. If I can show you this example here, is when obviously we've taken external 1 hour liquidity on the 1 hour time frame, and then we always drop to the lower time frame. Yeah. So for example, let me try and see if I can show you on here. So London is normally our manipulation session, and New York displaces, which is why in this example it is a very good example of that, because Asia just swept the external low, come back up. London's then manipulated these buyers who got in after sweeping the external low, and it's manipulated them back out to essentially break even. But then it's also I've just manipulated this then, started to displace, and then New York is just wanted to come to rebalance to equilibrium or inefficiencies in this example, and then gone for the highs. I think, like I said, if you wanted to hold this over a couple of days, you could have even targeted buy side, and like I'm that confident because you've got such an inefficiency up here that I'm guessing you would have had some retracements to rebalance to this FEG down here as well.
Okay.
But we can see if it plays out. But manipulation is just basically one last push down to get out, or to get buyers out, or one last push up to get sellers out before it actually moves in the direction it wants to go.
It's like a trap.
Yeah, it traps you in, yeah. And that can be in the form of like just simple manipulation legs, like we've just shown, where we go to the lower time frames and then we go to the lower time frames and then we get that sweep of the low first before going higher, or it can be in the form of a turtle soup. There we go. Eventually we got there.
Yeah. Okay, that sounds good. I understand that a lot better now, all of that.
Yes.
So I'll rewatch this video and I'll make a little checklist, find the daily bias first, and then mark highs and lows, session lows, internals.
Yeah. What we're going to do is obviously get some. You're going to go to a website, get a backtesting session, and so essentially what we'll be doing then is for example, you'll just go like this on your charts and scrumple it all down, go to the replay mode, select the random time in price action, and then you and somebody else on a call can basically have like a battle between each other of like, okay, I'm finding my daily bias for starting a weekly. We're respecting weekly FEGs here to the upside. My daily bias then, if I go to the daily, and you just break down the chart like this, you know, okay, what can we see? We've taken a swing high, we're looking like we're about to be in bullish order flow. So then you'd be looking for, okay, let me drop to the lower time frames, 15 minute, okay, the 1 hour. What have we got? We've got buy side at the top, buy side here on the 1 hour. We've got sell side liquidity here. And then you just obviously just play it out and see what gets taken first. So if we generate more sell side, okay, sell side got taken first. Now you're looking for where the price wants to respect and come back into that range, or whether it starts disrespecting, respecting bearish order flow if you want to keep going lower. So essentially what you want to be seeing then is inverse fair value gaps to make sure price comes back up in our direction. Okay, we've got one more manipulation leg, bang, we've got that inverse there. Okay, so now you're looking, okay, now I've got my buy side targets up here for these liquidities. Buy side liquidity, what can we be looking for? We've got our inverse, we've got our last manipulation leg. Can I go to the 15 minute and see any internal highs and lows? Not quite at the moment. The 5 minute, not a minute. Let's just keep playing price out. Okay, we've come back down, rebalancing to that. Into that 1 hour bearish order flow that we've inversed. Keep playing price because this is New York. We wouldn't be taking a trade here now. It'd probably go into. There's no trade to take at the moment. And then obviously Asia, Sydney would need to play out. So we can just do this. Sydney, this is the next day. So these are it, highs and lows then. Asia started the push up. London has come back down. Have we got any inefficiencies on the higher time frames? Yeah, we've got a 1 hour here to the buy side. Green. Again, this is a random point of price action. I have no clue whether this trade's going to play out, but this is what we're going to be doing on the calls, on the backtesting sessions, is to get people used to spotting and backtesting, and obviously you just go like 1v1s against each other and stuff like that. A bit of fun, that's all, to make backtesting fun, because backtesting is fucking boring. So we've got a bearish order flow, we've got our CISD, which is here, we didn't respect it. We're waiting to see if we get any sweeps of liquidity on the lower time frames now. in London. You have come back to rebalance that inefficiency. So you could argue that you pushed up, you swept a swing high here, and you've broken it. You've come back down, made some more bearish order flow. There's your last push. You've taken sell side liquidity, all the sell side liquidity down here, to that point, and then you've got your CISD there, displays through, stops will be below. There's your entry, stops below the protected low, and then you're targeting, where's my liquidity zone on this one? This should be very fucking difficult to pull off. Like, obviously your buy side's there, but whether it reaches that is another thing, and obviously it might take a couple of days, whereas for us, I know we just want to be targeting internal liquidity, which would be these highs here essentially, or even these highs here for an 8 hour. Go back to the charts, and then obviously we should see, well, I wonder if this actually plays out to that buy side liquidity above. I can't see it. No, it didn't. So you would have aimed for these, and then like we had originally.
Yeah, tidy.
You would have had your RR, but yeah.
Is there a web, for TradingView, do you have to pay for the premium thing to get the replay mode?
Yeah. They fucking robbed me. They had me for 300 odd quid because I accidentally paid a year instead of a month. But
Oh, okay. Never mind that.
But no, make sure if you do buy it, make sure it's only for a month.
Yeah, Christ.
Just to test it out, yeah. But
I think it's worth doing it for a month, practice strategy, especially over December.
100%. And like, does that make sense why?
No, it does. I needed this call, to be honest. It's going to help. I will rewatch it like mad to understand it all properly, but it's awesome. It's really helpful.
Yeah, sweet. But yeah, that this would be my CISD year, or you could have even said, because you've swept the high, so you've taken liquidity here, swept the low, come back up, swept the high. This is why I wouldn't have wanted to come and take my trade then off this here, even though it would have played out, because essentially you have taken that high, you've displaced through, taken a swing high here. You could have taken the trade from there, stopped below protected low, and played out. But either one of those, because you've taken a high previously, and then this is the last time you've taken a low here. You could have had my CISD there, come back down, retapped, and it's gone. But
okay.
Yeah, hopefully this makes a bit of sense to you going into the markets now. But
yeah, thanks, mate. It's helpful. I'll rewatch it, like you said.
yeah, I'm going to upload it to you. Do you mind if I upload it to YouTube and then you can just watch?
Yeah, go for it.
Sure, bro. I think it'll give people a bit of insight, because I know a lot of people are asking the same questions as yourself, so just give them that insight to it.
Yeah, I mean, I'm new to this completely, the strategy, so it's just...
Yeah, what was you trading before?
It was gold, but it was just following signals.
I got you. Okay.
But I'm trying to do it myself now and learn 100%. It, but...
Yeah, 100%.
And then in the new year, I'm going to aim for a funded account then as well.
Sick. Yeah, just set in the new year. What have you got? You've got 6 months in the group, but you've got, even if you take a month or two to crack down the strategy and then look to invest some in your fundage, do you know what I mean? You can't go wrong then.
I mean, I've got my live account sorted and I'm using that at the moment, but I want to get funded alongside it.
Nice little bit more leverage in on you. But
yeah.
Yeah, sick, mate, as long as that makes sense to you. Got any other questions for me?
None really. I don't want to take your time up now. Been on you a while. I'll wait to watch you on YouTube then.
Sweet. All right then, bro. I'll catch you in a bit now.
Nice one, mate. Have a nice time away in a bit.